Hey everybody, Russell Gray, co-host of the Real Estate Guys radio show, and this is episode 10 of our silver investing series. And we really didn't plan on having an additional episode, but we got some great questions that came in. And as we went back and reviewed the original 9-part series, we realized there were maybe some things that we could have explained better. And so we thought it would just be a good idea to do this. And so we may continue to append this series with new episodes, depending on what you folks out there who are listening are wanting to know and understand. Now, one thing I do want to point out is that the purpose of this is a tutorial. This is about helping people who are new to the space, who are trying to get their minds around what silver and gold are and how they work and how they fit into the financial system and how they fit into a portfolio. That's really what this is about. So there's a lot of advanced stuff we could get into, and we may touch on that, but this isn't designed for that. So anyway, so welcome back, Dana Samuelson, who is going to be riding shotgun here, and he's our resident precious metals expert from American Gold Exchange. Hi, Dana.
Hi, Russ. Great to see you again.
Well, I want to say a big thanks to you for being so generous. I know that your business is just booming right now. Everybody and their brother is getting on board the gold and silver, the precious metals train, and that's an indication of losing faith in currencies. And the dollar has kind of been the last one to begin to cast doubts upon. But with the Fed's aggressive printing and, recently Chairman Powell coming out going, hey guys, we're going to overshoot inflation. We're not worried about inflation. You can pretty much forget about any interest rate increases for at least the next couple of years. It's pedal to the metal. I think that's just going to continue to goose precious metals pricing. Is that what you're seeing kind of at the street level?
Yes. We've had an enormous wave of business come at us, first in March, as we talked about before, and then again in July and August again, when the metals prices took off and gold set a record at 2080 and silver got all the way into the low 29s. Now that the metals are in a corrective consolidation phase, which is a typical price movement in a running market, either way, up or down, gives the market a chance to catch a breath, get some weak hands out of play. We're seeing a bit of a pause in the buying activity. So it's a bit slower. So that's good in a couple of ways. It gives people a chance to buy a dip. It also is, we're seeing some premiums come down, which we'll talk about in a minute too. But I think the bigger point to make is the fact that the Fed is doing what they're doing on inflation, going to let it run hot when we get inflation, if we get inflation, number one, and number two, keep interest rates at zero. I mean, they see the economic damage that the COVID closures have done to our economy probably better than anyone else at this point in time, because a lot of the numbers we're getting are mushy. The Fed doesn't have a way, the government doesn't have a way to really measure a furloughed employee who might or might not be terminated. So the jobs numbers are squishy, some of the other numbers are squishy, and we just don't know what kind of recovery we're going to get. But the Fed is concerned, and that's why they've done what they've done in their last meeting. And this is not a good sign for the economy in the short term and perhaps in the long run too. And that's why metals are in favor.
Yeah, well, I mean, I look at it from the real estate side of things, and I think if I'm the Fed, my biggest problem is I can't raise interest rates because I implode the bond market. We talked about that before, right? Mm-hmm. Rising interest rates mean declining bond prices. It blows up financial institutions that are holding bonds on their balance sheets as assets, especially if they've pledged them as collateral, and would be faced with margin calls. So that's a big problem. And then the other thing is you've got the banking system. If people are not making their mortgage payments, their car payments, you've got a lot of debt that has the potential to go bad. And it's just a lot cheaper for the Fed and the federal government, two different departments, to get together and pump money directly to people through PPP loans and through direct deposits and through extended unemployment benefits. Any way they can get money into the hands of people, it is cheaper for them to subsidize the making of the payments than it is to actually suck up all the bad debt.
Oh, completely.
Yeah.
Yes.
So they're already having to print tons of money just to keep the payments going. And so low interest rates make sense, direct deposits, liberal loans to people, even if they don't pay them back, it's still cheaper and less damaging to the dollar, coming full circle back to precious metals. The concern for precious metals investors or people who are using precious metals is that the dollar is going to eventually either collapse or fall dramatically because of all of the printing that's going on, the expansion of the money supply. So that's kind of precious metals 101. So before you do that, you mentioned the word consolidation, and that's a word, it's a jargon word that gets thrown around a lot. I know what it means, at least I think I know what it means, but rather than have me describe it, when you say the word consolidation for our viewers, what does that mean?
Well, it means the markets are having a chance to digest what has occurred. So we've seen the gold price, for example, go from 1,800 in the middle of July all the way past the previous high of 1911 to 2080 on a bullet. I mean, straight up. And every market that goes straight up has to correct and come back down because there'll be profit taking. So we've seen profit taking, and that begets more profit taking because as the price starts to come down, people that have made that money, they want to lock in the profit. So it gets pushed back down.
So the turning point is called the top.
Right. Exactly.
And eventually and that would be resistance to going higher.
Correct.
Talking about charts, and you brought some charts, and we'll probably look at some charts in a minute. And then when it starts to come down, at some point, it hits a point where people go, okay, that's cheap. I'm going to get back in. And what do we call that?
Support. So we had a turning point. So right now I see the gold market in about a 1910 support level to a 1980 resistance level, which puts us. The previous high, which was a resistance point in 2011, is now a support level. And the $2,000 point is a psychological resistance point. With silver, we went from about 1850 all the way to low 29s. We're in about a $25 to $28 consolidation range now, where the market's trading within these support and resistance levels, but not moving outside of them. And it's, kind of a quieter phase right now, waiting for more economic news, more currency news, more political news. And that's another whole dynamic we're just getting into, which is the presidential election cycle. And we might see some big up and down swings over the next 90, we're left, September, 2 months. We only have 60 days to go.
Yes, and it's going to be a wild ride. So, Dana, I'm going to put the chart that you sent over up on the screen.
Okay.
This is the gold chart. Now, this is gold priced in US dollars, which is how most people watching are going to think about it.
Right.
And if you can just kind of call out, and I'll try to run my mouse over, but you've got these lines coming across, and this green line down here, this 1,050. What is that?
That's a support and resistance line. You can see to the left side of the price movement, it's red, which means it's resistance going up. And then on the way back down, it's support.
Gotcha. So when it crossed over the 1050, and I remember when that happened, that was kind of, it kind of peaked a couple of times, and then it poked its head up after, around 1,000 and busted through.
Right.
And then after that happens, it's a roller coaster, but it kind of moves up to the next level of resistance.
Right.
And then this becomes support. So that's kind of that channel between support and resistance that you talk about. And then it went way up, way up, way up. And that was this way back the last time in the 2008 crisis, in the wake of that over, 2009, 2010, 2011, 2012, when they were doing all the printing. And this is how gold responds to the expansion of the Fed's balance sheet. Is that what I see happening here?
Yeah, that's exactly what that whole run above 1370 is. That is QE1 and QE2, that is uncertainty over the US economy, that is the balance sheet expanding, the economy contracting, and no one knew where quite it was going to end, and we would get to a turning point where we would start to get economic traction again. And that really didn't happen until 2013, when we got the correction and the price finally fell back down under 1,600, 1,550 into that lower channel, which you've got the cursor at now.
Yeah.
1370. So that's a big V-shaped bottom and a 6-year channel between basically about 1,100 and 1,350.
Yeah. Now, so here's the thing for me, and this is where I kind of break with folks like you, Dana, and a lot of people in the gold community, because people in the gold community like to use the metals as a trading vehicle to create dollars. So they want to buy low, sell high. I use these charts to figure out when I can acquire the most for the least. In other words, when is there a sale?
Right.
So I'm not interested in finishing the round trip. I'm not interested in buying gold low, selling gold high, and then finishing with dollars. I'm interested in earning dollars and then buying gold low and then just adding to the supply. And if I ever want to get dollars out of my gold, I probably would borrow against it the way I would equity in a property versus selling it, because I just want to own it like savings over the long haul. I look at it as equity, like on my balance sheet. I don't look at it as a trading vehicle. So anyway, it's just, I'm not saying I'm right, but that's just a different perspective. And that's the way I tend to look at it. Okay, coming back to this chart real quick. I mean, I think the obvious thing that begs the question is, you know, over here, we just shot to the moon. We blew through the resistance level here, which was the previous past peak. And then we came up past 1923, which was the all-time high or whatever it was, through the 2000 psychological barrier and got all the way up. And now we've kind of dipped back down to where I think we're floating as we're recording right around 1935 or something like that. So, you know, the question is if you're sitting here, it's like, should I wait and hope that it goes back down and forms this cup again? Or, you know, there's the concept of a cup and handle where it kind of moves sideways in consolidation, if you will, trying to decide, is it going to go up or down? What do you see happening in the future?
Well, we're in a consolidation phase where we are going to be channeling between basically 1900 and 2000 for the time being. But, you know, unless we come out of the virus closures with a really strong economic recovery, gold's not going to get much cheaper, because we've already acquired more debt in less time over the last 6 months than we did in the 2 years back in 2009, 10, and 11, when gold doubled from $9 to $1,900.
Yeah, and again,
we haven't had a chance for the metal price to react to that money printing yet, or potentially weaker economy, which is why the Fed is being so forward-looking and being accommodative right now with printing. We're going to get another round of stimulus, low interest rates. This is all good for gold. And I think that gold has the potential to go, you know, 20, 30% higher conservatively. And some analysts are saying it could go, you know, to multiples of what it is already.
Well, if you look at where 2008 was when the last financial crisis hit, and, you know, you got the little spike as everybody ran into gold, and then things kind of calmed down, and then it became apparent it was really bad, and it went way up as a percentage.
Right.
It nearly tripled. And of course, you look at where it started when this all happened, you know, to triple, it's going to be way off the chart.
Yeah, it'd be, you know, triple from 1350 is, you know, 4,900.
Yeah. Yeah. So we got some questions here, and I don't know how long. This might be a little bit of a long session. So, you know, we might break it up into smaller ones and issue them separately, or if you're watching this and it's too long for you, then just pause it and come back and watch the rest of it. But here's a question we got from someone. It says, one of the challenges I have come across is that if I want to buy silver bullion, the premium is $7.50 a coin. And this is on a coin, you know, where spot is like 28 bucks or whatever. So this is almost a 30% markup versus gold, which is only a 40%, what he's calling a markup or premium. But he's saying now that silver is $26.50 an ounce, that's the time he wrote the question, do you think silver is still good due to the fact that its previous high was 50? In other words, it's still close to half off its all-time high compared to gold, which is already there. And I guess the rest of the question, which isn't really stated, is, or would gold be the better one because of the lower premium? So why don't you just explain, I know we covered this before, but since it came up, just kind of explain the concept of what the premium is and why there's such a disparity in terms of a percentage between the premium on an ounce of silver versus the premium on an ounce of gold.
Okay, well, let's use 1900 as a basis price for gold. All right, 1 ounce of gold is worth $1,900. And for the mint to make, you know, $1,900 worth, they only have to make 1 ounce. Now, when we started our series, silver was a little less than $19 an ounce. It's $26, $27 an ounce right now. for the U.S. Mint, the Royal Canadian Mint, any of the mints around the world to make an ounce of silver and make an equivalent dollar value to gold, they've got to make 70, 80, or even 100 times as many units. So the production cost per unit is higher proportionally. So silver tends to have a higher percentage premium. We tend to trade it in dollars rather than percentages like we do with gold. And there's been such a rush on silver because it has been undervalued relative to gold. And we measure that through the gold and silver ratio, which I'm sure we'll talk about a little bit more in a moment. There's been a big rush to silver, and there's a couple of bottleneck points right now or that have been in place in the marketplace. Number one is the blanks. The US Mint doesn't make their own blanks. The Royal Canadian Mint outsources some of their blanks. And it's getting the blanks made that the actual coins are struck on. That is where a bottleneck is. And also we've had COVID virus closures at the production facilities too, which have impaired the mint's abilities to react and produce enough coins in a timely manner to keep premiums normal. So what happens when there's more demand than there is supply? The premiums rise, and that's what happened. Normally a price over silver content for a 1 ounce silver coin is $3 to the public. A dealer like me would pay about $2.50, and we'd sell them for $3, $3.25, $4. But in the squeeze that we've been in, without enough merchandise to go around, the premium has risen to $5, $6, and $7. I mean, Silver Eagles got, one vendor out in there, a big one, was selling him it for $10 over spot. Our price never got that high. I think we got to $7.99 at our top price. But we have seen over the last couple of weeks enough of supply come into the market, and more importantly, a reduction in demand on this price consolidation phase that we're in, where we're starting to get some parity and premiums are coming back down again now. So, if silver's 26 and you like it because it's still only half of its previous high compared to gold, and I do think silver's a great value still at this price, what do? Well, you shop for alternatives to a high premium unit like a US Silver Eagle and go for other mints like the Royal Canadian Mint. We've done a pretty big volume in South African silver Krugerrands that we don't normally do because it's been a good lower priced alternative.
Or you go to bars, or you go to junk, or you go to something, where well, of course, junk sometimes gets a huge premium because that's limited.
Premiums on everything spiked, and there has not been a consistent supply of 100 ounce bars either. That's spotty right now. So, but we have seen premiums come down. So it's a frustrating situation to be in, but there's really no easy way around.
Yeah. So, if you're in a situation, I think that where you've got a pretty good stack and you just want to add to it, then you pick your entrance points based on watching the gold to silver ratio, which we'll talk about in a minute, based on watching the premiums and trying to get a gauge on whether whatever shortages are occurring are being caused by temporary situations or a legit shortage. Because if it's going to be a legit long-term prolonged shortage and you don't have any, then whatever premium you need to pay to get some is probably worth it, because in that scenario there's a lot of upward pressure on the pricing. And again, I don't look at it from like, hey, someday I want to sell it. I just want to make sure when I buy it I get as much as I can that makes sense. And then you can take the same thing you would do in a stock, that, you dollar cost average. Sometimes, you're going to buy and you're going to pay a higher premium. Sometimes you're going to pay a lower premium. But I would say just based on the fact that silver from a dollar perspective is still, $20 below its all-time high, which it hit twice, that it probably just based on history has a lot more upside than gold. But then it's hard to look at gold right now and think that gold doesn't have a lot of upside too. So what does that mean for silver? Could be pretty powerful. As of this recording, last word I saw, and Dana, I don't know if you can corroborate this or not, but I read that silver is the number one performing investment year to date in 2020.
On a percentage basis, it would be. Yes, absolutely.
Yeah. And the question is how much more does it have to run? Well, it depends. So we're not here to tell you. We're not, price predictors or prognosticators. I'm not really a chartist. Dana is a little bit more. I just look at the fact of what precious metals should be doing in your portfolio, what it's protecting you from, and the likelihood of those things happening. And I'm trying to figure out, when is a good time to add to a position, or when would be a good time to borrow. Best time to borrow is when interest rates are low and you got a lot of equity. The difference is when you borrow against your metal, you do get margin calls, so you have to be prepared for that. It's not like borrowing against your real estate equity. Okay, let's do a next question. So this is an interesting one, and we're going to go ahead and touch on it, but we're not going to dig deep on it, okay, because this is a tutorial and this is a can of worms. But this guy said, and I remember reading this comment, you never got around to talking about the elephant in the room, market manipulation, and then he got a little snipey and said, thanks for keeping us in kindergarten. Well, Bob, that was actually, the tutorial was designed to be a tutorial for people that are new to the space. And I would say that really getting your mind around the concept of manipulation and the futures markets and the difference between physical and paper, which we talked about a little bit, and the motivations for it, manipulation, not to mention the methodologies for manipulation. That's all pretty advanced stuff.
Right.
But from a practical standpoint, because again, Dana, I love talking to you, and when we do our boots on the ground updates, it's the same thing, because you read what's going on in the news and in the macro, and then you talk to somebody that's dealing in the trenches every day, talking to the wholesalers and looking up the supply chain and dealing with the people coming in and buying and selling and what they're feeling and asking, and sourcing of inventory and all that. I mean, in the real world where you live, how much impact, or what's your take on market manipulation in terms of affecting how people actually buy and sell their metal?
Well, I've always been of the camp that, the precious metals markets are smaller markets compared to the stock market, the bond market, the currency market. We do get bullied, where the market can get pushed around on a short-term basis for a little while.
Meaning a big player can come in and buy or sell and actually move the price because the market is so thin or small.
Right. A big player can push the market around, but they can't continually do so for a long period of time. So you have that aspect of it where it does get bullied on occasion. Okay. But it doesn't last. It can't last more than a couple of hours or a couple of days normally. And we also have front running and spoofing, just like we have in all computer traded high, algorithm markets these days. So you see some of that. And when you see these big headlines, metals traders, convicted for manipulating the market, that's what they're doing. They're front running client trades or other orders in the market just to make a few pennies or nickels or dimes, or if they're lucky, dollars right now for a minute. I mean, that's what I look at as manipulation. And then I take a step back and say, oh yeah, we're getting bullied a bit right now by a big player. But in the long run, the markets are going to go where they're going to go. They're traded worldwide, 24 hours a day, 5 days a week, and it's big money overall.
And they're getting harder to manipulate because the East, China in particular, but also India and some other places, and certainly Russia, a lot of people, central banks, especially in 2019, began to stock up on physical. And
Right.
so you can't just go in there and flip a bunch of contracts and push things around to try to create, dollar profits when you don't actually have to deliver the metal or even have the metal to trade. And the argument is some of that stuff should be illegal. Okay. And some of the stuff is illegal and not enforced. Okay. Well,
Right.
we all know that happens, but Dana, to your point, players start taking real tonnage out of the market. At some point, the physical market holds that paper market accountable to the real world. It's the entire argument for gold as a reserve currency, what its role is in central banking. So I would just say this, there's an organization called GATA, the Gold Antitrust Association. It's a nonprofit organization. They are incredible researchers,
Yeah.
and they feel that they have documented in very clear terms all of the manipulation going on, and they're very outraged that nobody's doing anything about it. Like a lot of things that people are outraged that go on in government and in banking that nobody does anything about. So certainly precious metals isn't the only market where people get away with egregious behavior. But there's another guy out there that I follow named Keith Weiner, and he has a website, monetary-metals.com. And Keith doesn't think there's any manipulation at all. And he's really an outlier. I mean, if you talk to anybody in the space, everybody acknowledges manipulation. But Keith, makes an argument that it's not, and he's written papers, and he's a real heady guy. So, pack your lunch and bring your highlighter and really, but if you're interested in both sides of the argument, those are the two places that I go to try to get my mind around. But like I said, from a practical point of view, it is what it is. And I don't really have time to consider what it should be. I'm not a politician. I'm not a regulator. I'm just a dude trying to figure out what's really happening in the real world and how to best position myself. So that's kind of my take on it. Before we move on, Dana, do you have any closing thoughts on that concept of manipulation?
Well, I watch the futures markets, trade in gold and silver all day, every day. I've been doing it for 22 years now. And you can see the number of bids and offers, on an online basis in real time. And you can see how the computers kick in sometimes, how a big order can move the market a bit. But there's always a buyer and a seller. And there's always a transaction taking place, which helps to make it a free market, a truly free market. Now, does it get shoved around a little bit? Yes, like we said. But I think the markets are really as close to pure as you're going to get in this world today.
Yeah, which is not very pure, but at least it's equally impure with every other market you could be in there trading in. All right, so the next question kind of is related, at least in my mind. And so let me read the question. It's kind of long, and it started out really more as a statement, but it's got something in there. And this comes up a lot because there seems to be like two camps, the Bitcoin camp, the cryptocurrency camp, and the precious metals camp. Two people that believe in the same things for the same reasons, but look at the answer very differently. So it says, how do you combine some of the benefits of Bitcoin with silver? How do you put those two together? And then they talk about how this person is, he signed it Ben Franklin. I don't know the name of the person. I don't think it was Ben. He's been gone for a while. Constitutional silver coin, 64 and older dimes, what we call junk silver. And part of the value of Bitcoin is that after 21 million are mined digitally, no more can ever be generated. So we're told. I've never seen the code. I wouldn't recognize it if I did. So you have to take that on faith. Same for constitutional silver coins. No more of those coins will ever be made again. That's probably true. Constitutional silver coins, we call junk silver, easily identified, simple to trade or sell. Forget numismatic unless you're an experienced collector. I would agree with that. Or unless you have an experienced collector as your advisor, someone like Dana, who's a numismatic guru. And as years pass and massive inflation of the dollar happens, meaning devaluation caused by massive printing, the general condition silver coins will be impossible to find. Yes. So many of us are hoarding them now. Yes, please, they're not junk. Oh, he doesn't like the word junk. Sorry. They're constitutional gems from American history. Yes. So the question is, how do you combine some of the benefits of Bitcoin and silver? Any thoughts on that, Dana, before I share mine?
Well, I'm really not the person to talk to about Bitcoin. I understand what it is. I've watched it since its inception. A friend of mine told me I should get someone that was $20 a Bitcoin.
And you should have.
Yeah, he was entirely right. But he's also got a computer with 18 of them in it that he can't get in. So he lost the password and he doesn't know what it is. So we laugh about that to this day. The one question I have with Bitcoin that you're never going to have with precious metals is, what if the power goes out? If you lose power and the grid goes down, the Bitcoins aren't going to help you that much. So they're two entirely different things. And I do live in the physical precious metals world, so I'm biased. So I'm not the right person to ask that question. Yeah. I'll turn it over to you.
Well, so we had another question about Bitcoin too, and I'm going to kind of blend those together. This guy says only boomers and older are talking about gold and silver. Well, I'm certainly in that crowd. That is heavy to transport, super hard and expensive to move around, especially in and out of countries, and so much fake metal for the average investors, lots of overhead. Well, the younger people are investing in real gold in digital form Bitcoin, and every advantage that gold and silver doesn't have in a virtual form for the modern age. So this guy, Drew, thinks that gold and Bitcoin is a better version of gold. I don't necessarily agree with that. So I'm going to kind of combine these, and then I'll point to a couple of reference books that I think will be useful. To me, Bitcoin is exactly what it says it is. It is a cryptocurrency, and a currency is something you can trade with. Money, on the other hand, is a commodity that should hold its value over a period of time, should be very stable relative to other assets. I don't know that Bitcoin has gotten to the point yet, although when it joined the futures market, all of a sudden the price moderated quite a bit. And I don't think it has to be an either or. How do you combine some of the benefits of Bitcoin and silver? Well, you issue Bitcoin or you use Bitcoin to trade, and then you make it redeemable for physical metal. You back it with something real. It's the same thing you would do with digital dollars or any paper currency. So combining the two is combining the two. So you have a digital currency and you have a physical asset. In terms of younger people investing in real gold, I would say that being a boomer, I would say I struggled and still maybe don't completely understand the what, where, and why of Bitcoin. So I'm not here to cast a vote, but I do tend to avoid things that I don't understand, and especially when they're technical. So if you feel like you've really got your mind around it, but as a younger person, before you turn your back on gold with its 5,000-year history and central banks that are loading up on it, clearly insiders on money and currency and some of the brightest economic minds in the world, even if they use some of their wisdom for nefarious purposes, although I'm not impugning anybody's motives, but it's possible. Ron Paul, a long time ago, wrote a book called The Case for Gold. And it's a good little booklet that talks about why currency should be backed by something physical that, in other words, would be redeemable. Jim Rickards did a follow-up book a few years back called The New Case for Gold, explaining why gold is uniquely positioned to be the ideal backer of currency.
Right.
So the first notion is to understand that currency and money are two different things. And we covered that, I think, in one of our early episodes. And number two, that gold is unique in its ability to act as money. Now, Bitcoin may be unique in its ability to behave as cryptocurrency. I've read this book. I can't tell you if it's good or bad. I'm still trying to understand it. But I would encourage whichever side of the aisle you're on, be like Robert Kiyosaki and stand on the coin. Robert was a hardcore gold guy, didn't want anything to do with Bitcoin. Today, he advocates both. So you don't have to make a choice. You can do both.
Right.
And I think both Dana and I wish that when presented with the opportunity to do Bitcoin, we would have. Okay. But we were steeped in our thinking. So I appreciate the comments, but I think we can all learn, boomers or millennials, that we need to keep our minds open and look at both sides of the equation. Let's just jump to this last question. And I think we've been at this long enough and we can come back and do another round and collect some more questions. But I think this is a good one, Dana. And since we have you, what is the best way to approach a coin dealer when selling? Do you just show a complete or partial list of your inventory and hope that they buy? Or do you only ask the dealer what he's in the market for? How does it work? And of course, because I don't sell, I don't know. Right? So I've never done it.
Well, first of all, you want to find someone reputable, right? And that's pretty easy to do. I'm a member of the Professional Numismatists Guild. We use the initials PNG for the organization. It's the top coin dealers in the country who are also precious metals dealers. And this is the cream of the crop in our marketplace. So I would encourage you to find a PNG member near you, or contact your local dealer. I don't think it's advantageous to not show your cards to the dealer that you want to sell to. I make a market in certain things, and I make a very strong market in certain things, and other things I just don't deal in at all. So if I get a list that's soup to nuts of some of everything, I'll tell who's ever the seller of it. I say, look, I'm going to buy these from you, and I'll pay you a really good price for those. But those are not what I deal in, and I will refer you to somewhere else who might be able to help you more effectively than I can. That's the way I look at it from my side of the table. I think if you want to test a dealer, yeah, you should bring in, give him a test and see how he does. We have people that do that with us, both selling and buying. It's really funny. I had some people come here a month ago and they wanted to sell $100,000 worth of gold, and they wanted to see how the transaction went. So they only wanted to sell 50 in the first pass. So they came to my office. They sat in my conference room with me. We made our transaction. I gave them a check for $50,000. They went out to the car and they were knocking on the door. 5 minutes later, they wanted to sell the other 50. They had it with them. They just didn't tell me. So that was a little test I got. So that kind of thing can happen. But, it's best to use your common sense, do your research, check online reviews, because we all have websites. We all have reviews now. And if you need to get a referral, get a referral. But it's it's best if you just are candid and honest, because the most frustrating thing from a dealer, from my standpoint, is if someone comes to my office and they have a bag full of coins, they pull a couple out and they say, what do you pay for these? And then you tell them, and then they'll pull a couple more out and go, what do you pay for these? I would rather have them put everything on the table at once. Let me say, okay, I'll do these and I won't do those. It's more effective for me from a time standpoint. And if it's not fair on both sides, you know, we're going to conserve a little bit or pay a little less than we might, just out of frustration. So we're natural, we're human beings. So it's best to just be candid and honest. And if you don't have a good feeling about it, there's a reason for that. And then I would say, you know, do competitive shopping as well. And there's a lot of alternatives with the internet these days.
Yeah. So I'll just toss this in, and somebody else asked, how do you find a reputable dealer? So I said that was going to be the last question, but since you brought it up and really they kind of dovetail, let's put them together. To me, I think that when you're out there and you're going to do business with anybody, you have to ask yourself, what is their commitment to their brand and their reputation? How visible are they in the marketplace? How much do they have to lose if they screw you over? Right. And then the other thing is, you know, do they seem to be interested in having a long-term relationship with you? And are you positioning yourself like you want to have a long-term relationship with them? I mean, this is like, to me, it's like having an old school banker relationship. You know, to me, precious metals is money, and I'm dealing with my banker kind of old fashioned way, where I'm going to go in and we're going to have an ongoing relationship, and you care about your reputation. You're kind of a pillar in the community. That's why I'm not about like eBay and, you know, going to flea markets and people that are, you know, working out of the back of their car. They don't know me. They may never see me again. They don't have any stake. I can't find them if they don't have an internet presence, if they don't have a digital or physical presence where I feel like they could be shamed if they took advantage of me or someone else. Then I'm a little nervous, right? If they belong to professional organizations, especially if they have a tenure of doing that, or they've been in positions of authority, then you know that people in the industry have vetted them and looked at them and given them that level of influence and allowed them to continue to associate with that association brand. That's all worth something. And then once you find them, to your point, Dana, do some deals and see how it goes. And if it goes well, then do more deals. And pretty soon you wake up one day and you go from having a couple of dates to going steady to being semi-married, you know, and it's a relationship. And I think that's really what you're after in any business, but especially in this business. I mean, there's been times, and Dana knows this, where you know, he'll ship me something and I'll open it up, and, you know, and I'm weird and I count every coin, right? I get a big bag of junk silver and I open it up and I count everything and I inventory, because that's just the way I am. And I'll find out, oh, you know, 1965 quarter snuck in here or something, you know, or I'm short one. And I call you up and I go, hey, Dana, you know, just so you know, and I don't expect you to make it up to me like right away, but you always do, because you care about your reputation. You know, you can test somebody that way. You can come up with a small complaint where it's no skin off their nose to take care of you. You don't want to take advantage of somebody and be that guy or gal, but if it happens, then just report it and see what happens, see how they handle it. If they handle it honorably, that tells you something about them. So I think enough said on that, unless you have any other closing thoughts.
No, just find someone that you can trust, that you know is responsible, and a long-term member of the community is better than a short-term member of the community in our business. We're unregulated, and there are some operators out there who are less than scrupulous. So. Yeah.
Well, these days it's the best time ever, because, you know, people get ratted out really, really fast. So, you know, if you guys don't like what we're doing, you blow us up on the comments. So far, you've been relatively kind, and we appreciate that. I know we talked about doing a gold to silver ratio chart. We're not going to do that because we're out of time. Let's do this, Dana. In our next Boots on the Ground update, which should be coming out pretty soon, let's just go ahead and talk about what's going on in the market from a gold to silver ratio standpoint. Bring your chart and we'll kind of go through it and talk a little bit about it. How's that sound?
That's perfect.
Okay, great. And then meanwhile, if you're out there watching this, no matter when you're watching it, don't worry about the prices or what's going on in the market. You know, if you're watching this 2 years later, it doesn't matter, right? The tutorial is just about concepts and principles. But if you have questions, put them in the comment section below and we'll glean those, and we'll do another Q&A down the road. And as long as you keep sending us questions, I'm pretty sure I can impose upon Dana to come and sit down and do these from time to time. We really want you to understand the way precious metals works, the way the markets work, kind of, how to time your entrances and your exits if you decide to exit, strategically how to use it in your portfolio. I'm going to be marrying that together with, I think, real estate, debt, and precious metals really blend together to create a powerful wealth accelerator. And I've talked to Dana and Brian London, another mutual friend of ours, big gold expert, and shared some of these thoughts. And they tell me they've never seen anybody present this stuff before. So I feel like I'm kind of an odd duck. It seems like common sense to me, but for whatever reason, I think because I kind of straddle these two worlds, I figured something out that people like. So I'm going to put this tutorial together, precious equity at realestateguysradio.com, and explain to you how to convert equity or use real estate to acquire metal, and then how to use metal to acquire real estate. And it's a pretty powerful strategy, and it takes advantage of what's going on right now in terms of the dollar printing and what will probably continue to be going on for the foreseeable future, at least as far as what our last chair, the Jackson Hole meeting had to say. Okay, so any closing thoughts, Dana, before we call this one a day?
No, your strategy is a powerful strategy, Russ. I'll look forward to that. It's really good. So, and I'm happy to help however I can. Your motto is education for effective action, right?
Yep.
And that's what this is all about, education. I'm happy to participate, and you're doing the right thing. So thank you for having me as part of this.
Well, we all appreciate you. So again, if you got questions, put them down below and we'll do this again. And meanwhile, tell a friend, have them watch the series. Okay. Thanks a lot. Hey, thanks for watching our Silver Investing Series videos. We hope you're getting a lot out of them. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends, help them get on board this bus, help them protect and preserve their wealth to take advantage of what's going on in the world today. All right, thanks so much, and we'll see you in the next video.